Hi, this is Joseph. It's Monday. It's May 18th, end of day. This is the update. So we talked about a few different things earlier today. I sent out an update regarding the euro dollar and the bounce off of support. We talked about the pound dollar yesterday over the weekend with the weekend analysis. I was expecting some kind of a retracement back up to the level that it broke out of. The level was actually 2164. And it has clearly exceeded that. 2112 is where price is currently sitting. So it looks like at this point, and I didn't try to short it, which was a pretty good idea to not try to get in the way of something like this. So even though I have a confirmed continuation breakout trade, I still need confirmation. So there's two different ways and two different approaches that I use when I trade the continuation breakout trade. So the first is to try and navigate through the breakout and try to identify what is actually taking place that's forcing the breakout. So if this was actually taking place on a 1 hour chart, and this is a good exercise for coaching students that are trying to use my continuation breakout trade method. So very often we talk about two different opportunities with the continuation breakout trade if we were to execute on a 1 hour time frame. That would be for day trading purposes. We're going to be targeting a 55 pip target. And very often the continuation breakout trade, the signal candle will actually develop with economic data. So again, depending on the type of economic report, whether or not there's revisions, how the market's reacting to it, if there's a significant amount of volume behind a move like that, and if the news itself, the economic data was a big enough surprise, in other words, the deviation from the expected number to the actual number is big enough to surprise the market that you would expect some kind of a follow-through. That follow-through is going to be some kind of reevaluation in that currency pair at that point, because at that moment, for the most part, the market's determined that it's too high, the value of that currency pair, if it was a short opportunity. So considering that, there are times when there's a breakout with the economic data, but the news isn't as big a shock as you would normally expect to see some follow through to the downside, whatever the case might be. It's not always the exact same thing. But what I'm getting at is that if there's a breakout based on, let's say, something that takes place, and then the market is then quickly to digest that information and look beyond that report, which we very often, you hear that and you see that take place, and then you wonder, why isn't it moving the way you would expect it to? And then it reverses. The market's looking at more data. The market's looking at something else. Maybe there's some other bigger issue that, or maybe it's non-farm payrolls. In this current environment, we're looking at, health issues, economic growth outlook forward, 3 months, 6 months, what's going to happen after the elections. There's a lot going on there, as opposed to a normal trading environment where we're just trading off of economic reports on the economic calendar. Those are relatively easy, but this is not that type of trading environment. So to see this kind of behavior doesn't surprise me. And again, as I mentioned yesterday, and as this was setting up, even if I do get a continuation breakout signal pattern here on the daily time frame, I still need to be somewhat suspicious. If it is going to drop and it was going to trend, I needed to be specific about the take profit levels and not hold on to this trade opportunity indefinitely. I wanted to have targets that I could trade to on an intraday basis, because this is likely to happen. We're going to get news that would create movement, let's say during 1 week, and then the following week we get the complete opposite. And it's going to be as we get updated with this information. The medical side of these, of the collapse that we saw during March and April, and then also the economic outlook. So there's a lot to take into consideration, and things can turn quickly, and that is one of the reasons why we want to be really particular about take profit levels. Now, I didn't short this anyway. As I mentioned, I felt that this was not going to be a true clean continuation breakout trade because of the price levels that I'm dealing with here. Again, going back over here to the beginning of March and that low on March 19th, for the most part, we're looking at price stuck in the middle of that range. And this is going to create a lot of choppy sideways price action, in my experience, and quick reversals. So this was, and it looks like at this point, some kind of a reversal. It looks like price is likely to continue back up into the range of consolidation, and we may be here. So that's another thing that I've been saying for the last couple of weeks. It may take a little while, and it may take a few more weeks, possibly another month or so, before we get any kind of clarity where we could expect some kind of a trending move that would develop for 5 to 7 days, and perhaps even 7 to 10 days. So right now at this point, I'm expecting some more to the upside. And that's what I'll be looking for. I don't know if I'm necessarily going to get into the trade immediately when price takes out the high of Monday. I'll take a look at that. But if price starts to pull back down and sort of goes sideways at this point through the Asian session, and then at the London Open it starts to move up a little bit higher, it may give me an opportunity to trade that slight reversal at the open. So I'll be looking out for that. That's the pound dollar. The euro dollar is one of the last trades that I executed today, which was, we'll talk about that again on another time frame, another chart setup, which would probably, I'll go ahead and do that now because that was some of the videos that I sent out. So if you watched the videos earlier today, we were talking about this initial setup here on the euro dollar. This is actually euro futures, basically the same setup, basically the same thing. I'm trading both side by side. Most of you know that I trade futures at the same time I trade currency pairs. So this is another opportunity for me to identify with more depth and more insight, more transparency. So now again at this point we've got a closed completed candle. Earlier in the day we were looking at it and I said it really does me no good to sit here and stare at this thing on a daily time frame until the end of the day. So we've got the end of the day, it's in the books, and at this point I would expect some more follow through. It has broken through. The next level that I'm waiting for, let me go ahead and open this up. As it starts to push through that downtrend line right here, then I would have confirmation. And certainly when it takes out that price swing high, that is actually the first of the month of May. So when it takes out the high here, then I know we're probably going to continue a lot higher. So that's what it looks like at this point. I mean, we've seen the stock market rally all the way back up to certain levels that are really, I think a lot of people that resisted the possibility are confused and continue to fight it. And certainly surprised, but it isn't really a surprise when you consider at what length the each globally the governments and the central banks are willing to step in. It doesn't surprise me. I mean, trading through the 2008 crisis, there are so many similarities, and I'm not going to get into the political side, and I'm not going to debate, the possibilities of the future and at what point in time we're going to, the world's going to end up paying for something like this. But, everybody has their own opinions on that. And, but right now, we're certainly expecting that the government's going to continue to do whatever it is that they're doing, whatever it takes. This is exactly what, for the most part, we saw them do in 2008, whatever it takes. So we've got to ride it, not fight it. So that's the key to the whole thing here is don't fight it. I did mention that, and I received a couple of emails asking me for more clarity on what I meant by the 1 minute charts. So the 1 minute charts, I did mention that if you didn't see the video this afternoon that I sent out, please watch that. I sent it out through an email. But I specifically talked about using a 1 minute chart to gauge the open of a particular session. So again, at the end of the day, I'm going to continue to come back here and look at the daily setups. I'm also going to treat each session as its own trading opportunity and looking for opportunities at the open. And I'm going to be looking for volume. I'm going to be looking for momentum. I'm going to be looking for follow through at the open. And then that 1 minute chart, what I'm basically doing is not just looking at a 1 minute, like the first minute after the open. It continues, but it gives me a better visual. That's just my comfort level. You can do it certainly on a 30 minute. You can do it on a 5 minute. It's just what I use. I use a 1 minute. It's not for my entry, but it's to make sure that I see consistent follow through at the open where price continues to move in the direction of the acceleration. So again, if I see a lot of volume coming in at the first, right at the open, whether it's the London session, the Asian session, the New York session, I'm going to continue to look at, and I switch over to a 1 hour chart. I've got a 1 hour chart exclusively set up for that. But it helps me identify and confirm my setups here on the 30 minute and the 1 hour chart. And a lot of this really started with what I was seeing here on the daily time frame. Same thing. So I can translate all of this information from the daily time frame, move it down to, let's say if it was a 2 hour setup, it was not. It was actually a 30 minute and a 1 hour chart setup that I traded this morning, and it worked out perfectly. Again, I take profits at psychological levels, the 20, the 50, the 80, and the 100, for the most part when I'm trading inside of consolidation. If I'm trading off of a larger time frame, and I can go back to last year, 2018, 2019, We had some setups on the larger time frame. You can see some of those videos on the website. We're talking about certain breakouts with significant price swings, like an A high, B low, C retracement, and then it finally broke out, took out the low, and then I would trade it to some of those Fibonacci extension targets based on the depth of the retracement using that Fibonacci tool. Well, that's not what I get here. I don't have that opportunity to use that. And in some cases, I can't even use the Fibonacci tool accurately or correctly on the smaller time frames. So again, if I'm going to get into a trade, I need to be really specific. I don't want to linger too long into some of these trades because sometimes they'll retest the previous day's high and low and then reverse. So I'd give up the profits and I'd be stuck holding onto a trade for 24 hours. I don't want to do that. The longer I stay in a trade on a shorter, based on shorter time frames, the more exposure, I've got my capital and your capital if you're using the trade copier. The more things can change over time. All we need is another report about how bad or how good something is, and things can turn around depending on which direction you're trading it on. So again, I would expect more to the upside, but I'm not too sure that I'm going to get in immediately when price takes out the high. It really depends on what I see on the smaller time frames, like the 30-minute and the 1-hour chart. As far as for coaching students, I know one of the first things that you want to know after the rollover is it a good idea to trade the HL30? I don't think that we should trade the HL30 right now. It doesn't look like a good idea. But if price seems to hold at the previous day, which is Monday's high on the 30-minute chart, and then it continues to hold there, let's say into the London or New York session, and we get some economic data, and we can clearly see that it's just not going to go any higher, then maybe it may remain inside a consolidation, depending on which currency pair it is, whether it's the euro or the pound, dollar, whichever one it is. And I'm going to be looking for volume, obviously, on smaller time frames. I'm going to be looking for divergences with some of these indicators, and it might give me an opportunity to trade an HL30 later on in the London or New York session. But right now, at this point, based on the information that I have right now, I don't think it's a good idea to immediately start putting on shorts at the previous day's high right now. I would wait just a little bit longer for more confirmation. Usually we get a second or a retest of the highs on the 30-minute chart for HL30. So sometimes I'll get one HL30 pattern, and then it'll take off without me and it'll work and it'll hit the 20-pip target. And then other times it'll go back up, retest the previous day's high, and give me a second entry opportunity. And that's what I would look for. I think that that's a much more safer and safer opportunity. We're in quite a bit of consolidation. We are reaching a little level of technical support resistance here at this point. So I can't say for certain that it's going to break out and continue to trend higher until it clears this resistance point, this downtrend, and that May 1st high. At that point, then I would have more confirmation that it's likely to continue a lot higher. Again, running into that next resistance level. But it is choppy. You can see what's going on here. So I want to be careful. It is so far breaking out to the upside. I would expect more to the upside. So I wouldn't be prepared to short it right now. Just follow the trend at this point and look for signs and clues that it's likely to continue higher. I just don't know if I'm going to get any trade opportunities during the Asian session. I usually don't. That's usually when I sleep. Again, I'm located in California, and I go to sleep right around 5, 6 o'clock California time. I wake up before the London Open, and I look for opportunities. So sometimes I get trades during the London Open. Sometimes I don't. If I don't trade right at the London Open and I don't execute a trade, it's because I just don't have a solid setup and I can see either divergence or a pretty choppy trading range, and I'm going to stay out of the way. And then I'll wait for the next session, which would be the New York session, and that's when I'm going to get a better opportunity. I don't scalp. You know that. You know that when prior to using any of my services, I don't scalp. For 2 or 3 or 4 pips at a time. I specifically wait for solid setups that I know I can trade. The setup today, that was a really good move here on the euro dollar. And let me go ahead and go to that chart. That was a great trade that we took today. But again, when I get into these trades, I don't want to hold on to them indefinitely. I've got to target psychological levels. So I would expect more to the upside, but I'm waiting. I wouldn't try to sell it and fade it off here at this point. So please be very careful. I'll send out the next update at approximately this time, same time tomorrow. Again, my next trades, honestly, if I don't see anything during the London session, it's probably going to be during the New York session.